Northeast is the call to make. Whether you're buying your first home or you're a seasoned investor, Terry Kilakos and his team of mortgage and real estate brokers can help. It's simple and it's free. Make your dreams come true. Call Northeast.
And a happy Sunday afternoon, everyone. You're listening to The Real Estate Show. I'm your host, Terry Kilakos, chartered real estate and mortgage broker, as well as president of Northeast and CBC Alliance. And on today's show, we are going to be answering all of your questions about the real estate and mortgage market. So the phone lines are on, the text lines are on, so knock yourselves out, send them in, and we're going to answer all your questions. And we're even going to get to some of the questions that you guys asked last week, which we didn't get to. So joining me, we have my beautiful co-host, Merav Marciano, chartered real estate and mortgage broker and vice president super extraordinaire of both Northeast and CBC Alliance.
Hey, hey, hey.
Welcome.
What's up? It's nice and warm outside. I know it's a little rainy, but I'm loving this November weather.
Yeah. So
nice.
do I.
Nice.
I'm really liking this a lot, too. Again, feel free to call in with your questions to 514-790-0800, or you could text into 514-800. And don't forget to write your name in the text so we can give you proper kudos. You could also visit us online at facebook.com/Northeast Nordest and facebook.com/CBC Alliance Quebec. And please be sure to subscribe to our YouTube channel, which is
newsonthego.ca.
There you go, newsonthego.ca, where all of the fun and exciting stuff that happens behind the scenes here in the studio lives and breathes, and you could get to see all the weird stuff that I do, off the air, because there's a lot.
I can attest to that.
Yes, absolutely.
And news there is, and there has been in the last couple of weeks.
Yes, so before we kick off today's show and answer your questions, let's do a little bit of a market update, right?
Yep.
So, big news, obviously. I don't think it's much of a surprise to anyone. The United States, the Fed raised its benchmark rate by 0.75%.
Yeah, we weren't surprised, but again,
So why is this important?
because it affects the Bank of Canada's decision as well.
Why does it affect the Bank of Canada's decision?
Oh, what's up with the Inquisition? Has to do with the Canadian dollar, right?
That's right, exactly. So we have to put things in perspective, right? So they say that the states can't do, what did they say? The states can't sneeze without Canada catching a cold. Well, it's the same thing with stuff like this, right? So when the Fed raises their overnight rate by 0.75 or 0.50 or a quarter or whatever they're going to raise it by, what it does is it has a direct impact on the currency, right? So when they raise, you end up seeing their currency, the greenback gains a little bit of value there. And then all of the other currencies around the world that basically are tied to that greenback, to the US dollar, all of a sudden lose value. So then all of the other central banks have to raise their rates to actually keep things even Steven, if you will. You like that even Steven thing?
Steven, yeah.
So the good news is that the Fed did say that although they've, been very diligent in raising interest rates, that the time of raising rates is coming to an end.
Came or has come? Because
It's
December
coming to an
Okay.
end. It's coming to an end.
So you think December there's going to be one last hike and then we're done?
I think so. I think that, November 8th, we have the midterms that are coming up in the United States. And I think that after the midterms, there's going to be a change in the way that things are talked about in the States. And, maybe they're going to admit recession. I don't think so. The last quarter, they actually had a positive quarter. So the States did have two negative consecutive quarters. They had they were plus 2.6% in the last quarter in Q3. So I don't know if the recession will happen this year or next year, but there is a recession on the horizon. All economists are saying the same thing. Everyone is saying the same thing. So that's going to play into it as to whether or not they're going to have to pivot. I believe that, anyways, let's look at the Bank of Canada before I start going into, what I foresee and when I foresee the pivot actually occurring. So we also see that the Bank of Canada has also raised their overnight rate by 0.50%.
Yes, that happened October 26th.
Exactly. So 0.50, which actually took people by surprise because everyone was expecting the Bank of Canada to raise it by at least 0.75, and they actually only came in at 0.50. So now everyone's going, interesting. Are they slowing down? Clearly they are. Right? So maybe there'll be one more. Right now we're sitting at the overnight rate in Canada at 3.75%. I think in December we might actually see a quarter just to bring us to 4. I don't think they want to go higher. But that's just speculation on my part. Okay?
Okay, and that definitely affects people with variable rates, people with home equity lines of credit, people with personal lines of credit, any kind of loan that's variable.
Exactly. Anything that's actually tied to the bank's prime rate, which is ultimately impacted by the overnight rate, will be impacted by these increases. But it'll also be impacted when they decrease eventually.
Yeah.
So let's talk about the pivot point. So I believe, we're comparing right now 2022 to 2021, right? So a pandemic year with a non-pandemic year. And we've talked about this on this show. I believe that as we get into February of next year, now we're going to start comparing apples to apples. So we're going to be comparing a non-pandemic year with a non-pandemic year. And the minute we start doing that, I believe we're going to start to see inflation naturally come down without actually the banks doing anything further.
Okay, so let me get this straight. So we're going to start comparing, let's say, as of March, numbers that make sense.
Yep.
Which means we're going to see results that make sense.
Yep.
And somebody is going to take credit for
of course, the government is
inflation
going to,
dropping.
they're going to say, look, we raised interest rates, and by raising interest rates, inflation is down.
No, it's just you're doing a proper analysis right now.
Exactly.
Okay.
And I'll take it one step further. Sorry, I'm going off on a rant. I'm so sorry to our listeners.
You know what really grinds my gears? No, I'm just...
But, even the Bank of Montreal, so the economists, they came out. It was, I don't remember where I read this article, but they were talking about, they went to the Bank of Canada and they said, we have teams of economists that are working on analyzing inflation and everything, and we can't get to the same numbers that you guys are getting to. Talking to the Bank of Canada here. So they said, moving forward, because everything you guys are doing are ultimately impacting the markets, both the real estate markets and the stock markets and mutual funds and everything else, we want we want evidence. We want to know what you're using.
We want to see how you came to these numbers, basically.
Exactly.
Okay.
So,
well, and the rate, it has to make sense.
100%. We do want to cover a couple of more things in the market update. I know that Mike just called us and he has a question, but I'm going to hold off on Mike's question until after traffic. So, Mike, be patient, stay on the line with us, and we're going to get to you in a second. The other thing, inventory. So you're the real estate queen. Talk to us about inventory.
Oh, wow. Real estate queen.
Yeah.
So definitely inventory is up year over year. We've seen a 34% increase in active listings, which is very good.
That's welcome.
That is very welcome. But surprisingly, looking at the numbers, I was surprised to see that the actual values have not really dropped.
In Quebec.
In Quebec. I'm talking about Montreal specifically. That's right. So I was happy to see that, actually. So it's we're still pretty steady with respect to the median price. So I'm happy. It's
what we're not seeing anymore is we're not seeing these multiple offers coming in, right? So you get an offer on a house. Houses will stay on the market longer than what they were doing during the pandemic. During the pandemic, you would list a house on a Saturday. It would be sold by, Saturday night. We're not seeing that right now. Right now, houses are staying on the market for a month and a half, even 2 months, which is normal. This is how a normal market reacts. And we're not seeing a drop in those prices. So people are still coming close to, and in some case, still overbidding on the house.
Yeah, so in Montreal, for single-family homes, median prices went up by 2% year over year. Condominiums are steady at 0% increase, and multi-units went down by 4%.
The markets that are behaving badly are mostly Ontario, which we'll come to after traffic. When we come back, we're going to be looking at whether it's the right time to buy, or are you better off waiting until the spring like everyone else is doing. But first, we're going to take a detour off to the CJAD Traffic Center. You're listening to The Real Estate Show, and today we're talking about how the real estate market is, where the real estate market is going, and where we're going. I just mixed that up completely, but whatever, it doesn't matter. Feel free to call into the show with your questions, 514-790-0800, or you could text into 514-800. We have Mike, who's been patiently waiting for 7 minutes and 46 seconds. Mike, talk to us, my friend.
Happy Sunday, guys.
Happy Sunday. By the way, I wish my name was Mike. I've always... Because then
you don't like Sotirios.
No, but I'd be like, you're on the mic with Mike, Anyway, sorry. Okay, sorry. Please, Mike, go ahead.
Terry, I can mention my name anytime you want. Not a problem.
Sweet.
Question for you.
Yeah.
Our mortgage is up in about a year and a half.
Okay.
So I called the bank up about a few weeks ago to change my payments from monthly to accelerated weekly.
Yep.
And to add an additional 50% onto our payments just to speed up because
yep.
we're worried about interest rates going down and going in the next year and a half. We
Sure.
just want to bring down our balance as best we can.
Yep.
I got the papers in the mail, and they renewed my mortgage for 5 years at my low rate, at the same rate that I am now, at 2%.
No, I don't believe that they renewed it. So the paperwork that they sent you will show you what your actual interest rate and all that stuff is, the prevailing rate, but your actual renewal date should be still when it's supposed to be up for renewal. Is it a fixed or a variable, by the way?
It's a fixed rate at 2%, and the papers came in, mortgage renewal documents, and my maturity date went up 5 years instead of the 1.5 that's remaining.
What? That's crazy.
Yeah.
That's clear. That's clearly a mistake.
Now, can they come back to me and say this was a mistake? We signed the papers right away. We sent it back. On our mortgage documents we log into, our date went from 1.5 year renewal to 5 years now. Can they come back to me and say there was a mistake and change all this, or?
Is it possible they extended his amortization somehow?
There's something there. Okay, there's something. So yes, it could be possible that there was a mistake made. Okay, so on their part, can they come back to you? It's a bank. Of course, they could come back. Would they win the battle? No. If they sent you the documents, you signed them on time, and you sent them back, they're going to kick and scream, and I don't think that you're going to have issue with it. But there is balance and checks in place to prevent something like that from occurring. So if something like that did occur, I would be very surprised. I would be interested in seeing what your amortization is, because I understand that your maturity date has changed, but I would be curious to see what the amortization is. Maybe they extended something. They did something somewhere. If you want, I would actually love to see those documents and actually do a follow-up, on this show to talk specifically about that mistake or not mistake. Would you be into that? Would you be able to send them to me?
Yeah, Fred was our broker in the deal. So do you want me to send the documents to Fred or to you?
Oh, you're one of our clients to boot.
Yeah, we use you all the time. You're one stop. We just go there.
I love it. That's awesome.
We didn't get a hold of Fred because things happen so quickly, and just wanted to change our payments to accelerated, just to bring down our principal as fast as we can. We looked at our investments in the stocks, the mutual funds taking the hit pretty good.
Yeah.
So we diversed the money. We didn't sell. We just lowered our investments, and we're starting to put it towards the principal until the stock market gets back to where we feel comfortable investing the rest of the money.
Yeah. Listen, Mike, I Monday or today, whenever, send me those documents. I want to take a look. Who's your bank, out of curiosity?
Prefer not to say that.
Okay. All right. No problem. Send it to me. And let me take a look at that, because I would be very, very interested in seeing what exactly happened there. And if they ended up, if they ended up making a mistake and they try and come back to you, and we're your brokers, I'm going to go to bat for you myself. I'll be like, listen, too bad, so sad. You guys made the mistake. This is what it is, and this is what the client is going to be paying. So I love it. If they made a mistake like that, there is an angel shining down on you, my friend, so.
We went out of lottery tickets that night, but unfortunately we didn't win.
Thanks, Mike. Send me those docs, man. You too. Cheers. That's crazy. I
yeah,
love
that's
that.
interesting.
Yeah,
I love when the mistake happens in the consumer's benefit, obviously.
100%.
You know, it's not fun for the bank, but I mean, at the end of the day,
Who cares about the bank? Come on.
I don't think that's very nice, Terry.
Why? Why? The banks make enough money from us, okay? Listen, sometimes they could make a mistake that we benefit from, okay? Please.
You mentioned about before the break about some people are deciding to wait until the spring.
Yeah.
So what's the strategy now? We hear all our clients say, I'm going to wait, I'm going to wait, I'm going to wait. Now, if everybody's waiting, this is my fear.
Yeah.
Come January, February, March,
Exactly.
there is going to be a huge wave of buyers coming in.
So we have to remember, yes, the inventory has gone up. Okay, so there is more homes on the market. But what's interesting with the people that are selling their homes, they're not in a rush to sell, the majority of them. Okay, so yes, you are going to get the ones that, a few that are like, we need to sell now. But the majority of them are pretty chill about selling, whether they sell this month, next month, or the month after. They don't care. So you don't have people under the gun right now, currently. Okay? As we get into next year, all of these people that have been saying, we're going to wait, we're going to wait, we're going to wait, we're going to wait, are all it's going to take, and this is what I was talking about earlier, is that pivot point. All it's going to take is for the Bank of Canada to not raise interest rates or to drop by a quarter. The minute something like that happens, people are going to realize that the market has turned, because the media is going to jump all over it, right?
Of course.
So the minute the media jumps all over it, now all of a sudden we hit our pivot point. The minute that pivot point happens, all these people that are armed with their pre-approvals and they're ready to go, they're going to flood the market. And the minute they flood the market, it's game over.
We start up again with the multiple offers.
Absolutely.
Yeah.
Absolutely. And I don't care if there's inventory. Okay, I don't care if there's houses that, the inventory has gone up. It's not enough inventory to handle the amount of buyers that want to actually get into the market right now.
So would you say that from now until February is the opportunity?
Yes, absolutely. If you're planning on buying, you could buy now. Go make your offers. You could close next year if you want, right? Nothing stops you. I mean, I have a client who made an offer 3 months ago or 2 months ago on a house. They're closing in March. You could do that, right? Nothing says that you need to that you need to buy it within 30 days.
Mm-hmm.
Real estate brokers want you to buy it within 30 days, okay? But generally, nothing says that you need to buy it within 30 days. You could buy it in 60 days, 90 days, 120, 6 months later. If the contracts are good, they're good.
So the idea of waiting for the rates to drop is definitely not a good strategy.
If you're going to buy, buy. If you think that rates are going to come down, go variable. Simple as that. That's my...
And anyways, until you go to notary, you can modify that rate.
Exactly. I just want to get to a couple of the text questions.
Yeah.
There's one that's asking, my mortgage is due next May. How far in advance can you remortgage? You could remortgage at any point in time. You could remortgage now, even if you're due in May. You're going to pay a penalty. The penalty is not going to be anything crazy, but you theoretically can. What I like to do is I like to lock people's rates in for 120 days. So if someone like this gentleman or this lady, they come to me and they say, my mortgage is up for a renewal in May. What I would do is I would go in, I would lock in an interest rate for them for the next 120 days, which would take them into the last 3 months of their renewal cycle, if you will. And then by doing that, they get the best of both worlds. If the rates go up, at least they have a rate that's locked in. If the rates go down, we guarantee the lowest rate up until the time that they renew their mortgage.
And sometimes it even makes sense to renew right now if there's something imminent that they need cash flow or anything like that.
Exactly. Another quick question. Can real estate agents do an evaluation to determine capital gains tax? No, they cannot. You cannot use an evaluation from a real estate broker for capital gains purposes. You need to use an accredited appraiser. I was about to say an accredited mortgage professional. You need to use an accredited real estate
Accredited appraiser.
Thank you. When we come back, we're going to be looking at mortgage rates and whether we foresee them dropping anytime soon. But first, we're off to a seat.
Breath because I'm sitting in front of you.
Oh, God.
So we have a text that came in.
People, this is my life.
Good afternoon. Question. I have a mortgage due January 31st, 2023 with a mortgage of $250,000. I'm willing to put $100,000 against it. Should I wait to negotiate the rate in hopes of dropping? I have a rate as we speak of $297. What should I do? I'm confused. Thanks from Cesar.
Okay, it's Caesar. It's not Cesar.
Cesar is fancier.
But it's Caesar. It's Julius, it's not Julius Caesar. It's Julius Caesar.
I grew up in French.
Oh, okay.
Cesar.
All right. So January 31st, you're in like the perfect time to lock in an interest rate. So if you go to your bank right now, they can even do an early renewal, but you're going to be at the mercy of the bank. And you want to preserve this $297 for as long as you possibly can, especially if we think that interest rates are going to be dropping next year. So this is a perfect example of someone that should be coming to see me or see one of our brokers at the office. We would go in. We would lock in an interest rate for them for the next 120 days, the lowest that there is available for his specific mortgage. Mm-hmm. And then based on that, we make a decision as we get closer to January 31st if we execute on that mortgage that we just locked in for them, or if we do a new one that's going to be at a lower interest rate. So this is perfect. Okay, so hopefully that answers the question.
Yeah.
Did I just rant a little bit?
You ranted, but I get it. It's basically because he's in the right window of time. This is the right time to sort of secure a possible future for himself.
Exactly. And putting that extra $100,000, yes, it could definitely help. I mean, it'll definitely lower your monthly payments as you get to your maturity date. But it's got to be done properly. And you guys have to remember something. And please understand what I'm about to say. Do not pay your liabilities at the expense of your savings. Because what's going to end up happening is when you pay your liabilities at the expense of your savings, all you're going to have is no liabilities, but you're also going to have no savings, right? So if, Caesar, not Cesar, if Caesar, he should call in and correct us if it's Cesar. But anyways, if this 100,000 that Caesar has, and that's all the money he has, and he wants to put it against the house, don't do it. Don't do it. Maybe put a portion of it. Make sure your RSPs are being maxed out. And then from there, use the fruits of those savings to be able to pay off the liability. So,
I agree.
Anyways, I was going to
go off on... If it's going to save you $500 a month, but you're going to have zero in the bank...
Don't do it.
Exactly. You have to make sure it makes sense. I absolutely
agree.
So
we have to, people think that mortgages are just about interest rate. It's not about it. Interest rate is one facet. And I've always said a mortgage has so many facets around it. It's like a diamond, right? Mm-hmm. Down payments and paying them down and all that stuff is part of those facets. So we got to make sure that whatever you're doing makes sense. If it doesn't make sense, we don't do it. And unfortunately, it's one of these answers that I'm giving that might sound a little bit like cop-outy, if you will, but it's not. I want to make sure that I can't tell you put $100,000 against your mortgage so that you have a lower payment, because it might not benefit you to do that.
Makes sense.
Okay.
We have another question about a divorcing couple. Can you please explain how one buys the other out in a divorce when we each have a property? For example, one is in the city. When we each keep a property. Yeah, we each keep a property. One is in the city, one in the country.
So, look, at the end of the day, I guess if, the husband wants to keep the country house and the wife wants to keep the city house or vice versa, there's a different value that's associated to each property. So I wish that I could say that I've never had this. This comes up all the time. It's, and it's going to keep coming up. People get divorced. People separate. So we have to establish a value for each property, whether you do it with an appraiser or we can do it quickly at the office. I mean, it's up to you. It's whatever. Or you guys can come up with an amicable thing. And you say, well, the country house is worth this much. The city house is worth this much. And one person is obviously going to have to give more money to the other person. So if the city house, let's say the wife wants to keep the city house and the husband wants to keep the country house, and the city house is worth a lot more than the country house is, well, then at that point, the wife would have to give more money to the husband because that house is worth a lot more than the country house, or vice versa.
And then you obviously have to qualify.
And you have to
So
qualify
each one has
for
to qualify
that's
for
right.
a mortgage on their own to buy out
the
yeah.
spouses.
Yeah.
And we do this all the time. So I mean, by all means, you can give us a call at the office. I'll sit down with you and we'll look at the numbers. And if you guys are good, you guys can both come in. And if you flip all of my certificates and my stuff on my ward, there's marriage counselor certificates in the back. So maybe I'll even get you guys to stay together. I don't know. Save you guys some money.
Divorce is expensive, I can tell you that. There's another question, Terry, and that's a good one. After you pay off your mortgage completely,
Yeah.
do they have to do anything? Do they have to go to notary to get quittance, or does the bank do it? Not a, how do you say it in English?
It's a radiation in English or in quittance in French.
So do you have to go to notary, or does the bank do it?
No, so a lot of people think once their mortgage is paid off that the bank is going to, do what they need to do to go and radiate that mortgage. You don't. It has to be a notary that does it. You have to go in. The bank, the notary is going to ask the bank to provide them with a discharge statement. And it should say 0 because there's no balance owing. And then with that, the notary would be able to radiate that mortgage. And then the house is free and clear. But you have to be very careful, because a lot of people believe that they have a mortgage-free house, but in reality, they have no traditional type of mortgage, but they still have a HELOC.
A home equity line of credit.
Equity line of credit. And if you have a home equity line of credit and you owe money on it, then you can't discharge that mortgage. So I just want to put something in perspective. You have to remember, just because it has a different name, it doesn't mean that it's not a type of mortgage. And for those of you who doubt me right now, try not paying your HELOC, and let's see what happens. Yeah. I'm not suggesting people.
Yeah, it's a line of credit that's attached to your home, which is basically like a mortgage.
Exactly.
I get it.
Okay, so
should we talk about what's happening in the city evaluations?
I called it. When Valérie Plante was elected, and she said we're not going to raise. Anyways, I'm not going to go into my political beliefs now. Yes, evaluations are up. Yeah. They're way up. I think that our house has gone up by 50% or something. I mean, it's just astronomical. We've talked about this a couple of weeks ago on the show. I'm going to mention it again. If you don't believe that your house should be what the city is, I've completely lost my ability to speak now.
I'm telling you, it's my presence.
Yeah, I'm sure it is.
It's my presence. It's normal.
If you don't believe that the value of your house is what the city is saying that the value of the house is, you have the right to contest it. I think you pay $300. You get that. You get an evaluator that comes in. You contest the value, and they're going to do a proper evaluation on the house. But be careful, because it's a double-edged sword. When you do that evaluation, the value of your house might actually come in higher.
Yeah, they might say, I didn't realize your house is this nice.
Exactly. Wow, we had here that you had linoleum kitchen tiles, but in reality, you have ceramic. So that's going to add value to your house. Okay, so you have to be very, very careful.
Yeah.
But you could contest it if you choose to. Okay, make sense?
Yeah, absolutely.
Stay tuned for more real estate updates when we return from the CJAD Traffic Center. It's off to you, okay?
Yeah.
Why are prices staying so high, and how much more than the new evaluations should you price a property? Thank you.
Well, first question, they're staying so high based on what?
Right.
What baseline are we looking at? I personally think that our prices were due for an adjustment. It's been many, many years.
I agree.
So I think we had a good price adjustment. And the proof is that they're not going down.
Yep.
So clearly these are market values. Maybe we'll see a little drop just to have a little bit of a lower adjustment. But I mean, at the end of the day, I think we were due for an adjustment in prices. So that's the first question. Second question, with respect to listing your price, it's not really based on city evaluation value. It's really based on what the market
can support.
Yeah, what the market dictates. At the end of the day, your real estate broker is going to list your property, is going to do a comparative market analysis. What's sold in the last few months in your area, your type of property, for how much, etc. So at the end of the day, we've seen also unreasonable prices being asked. And even though your realtor might tell you, the same house as yours sold for $800,000, it doesn't make sense. You're expecting $900,000. Some people will insist, and it won't move.
That's right.
So the market really dictates the value of your home. It's not the city. It's none of that. It's really the market.
And your location. Location. I don't know. Okay.
You just wanted to say that.
You're right. I mean, it's supply and demand at the end of the day, right? So, I mean, if you have, Montreal, and I've always said this, it's an island. It's an island. I mean, just look at, Manhattan. And I don't want to compare Manhattan to Montreal. It's not at all the same. Okay, so before there's a slew of text that comes in that we can't compare the two, I'm going to compare the two in the sense that it is an island. If you want to live on this island, on this hunk of rock, you're going to pay a premium. You're going to pay what needs to be paid. And because God is not making any more land on this island, unless, they start digging stuff and makes, anyways, whatever. Anyways, you're going to pay. There's a limited amount of space, and there's a limited amount of real estate. So I don't think it's going to go down. Just like in in 2008, Manhattan prices didn't go down all that much relatively compared to the rest of, the country. It didn't go down. I'm sorry.
Mm-hmm. So let's talk about opportunities. In every down market or in every difficult market, there's always opportunities.
Sure.
So let's look at opportunities for buyers, sellers, people wanting to finance or refinance their place. So what are the opportunities out there?
Well, the opportunity is always there. And, we've done for, last week we ran a rerun, and I ran the rerun of the refinance show. Okay. The refinance show that we had done a couple of weeks back, we reran it last week. I apologize. I wasn't able to be in studio. I was on death's door. Okay. We'll just say, but that's a great opportunity, right? But you have to be willing to take that risk, right? You have to be willing to say, you know what, I have this toxic debt. I need to get rid of it. Let me get rid of it by, refinancing my mortgage or doing something like that. Don't be afraid of the interest rates.
So I won't look at the interest rate. I'm just going to look at cash flow. Cash flow makes sense.
Exactly.
Let's go for it.
Exactly. Besides that, there is a lot of real estate right now, not necessarily on the island of Montreal, not necessarily even in Quebec, for real estate investors, the savvy ones that understand that the market is, when you're a real estate investor, you're not only investing in one city block here, you're going to go out, and there's opportunity in Ontario. And we're seeing more and more opportunity because Ontario was a really badly behaving market. Okay, I mean, that was an
that took a hit. That took a hit.
That was an overinflated market. And when we look at the numbers in Canada, right, so we look at the national home price average, it's down. Why? Because of Ontario.
Ontario and BC also.
Parts of BC.
Yeah. Not
Not even Vancouver. Because why? Vancouver is a very niche kind of area. So the city of Vancouver itself is not down. Right? So you got to look at it. Yes, there's other suburb kind of areas that are down.
So the opportunity would be for who right now?
Investors that are willing to go outside of their comfort zone and go further outside of the cities that they're used to will make a lot of money in this market.
And I think buyers right now, if they don't wait until the spring, there is an opportunity right now to find deals. You're not fighting with 20 people,
Exactly.
Over that same house. You're fighting with one, with two.
Yep.
It's more reasonable. It's an easier fight if you want.
It's true. Very true. Very true.
Would you say it's a flipping market? Is it a for sale by owner?
It's not a for sale by owner market. We've had, he's probably listening right now. I have had a few clients over the last number of months who said, I want to sell my house. I'm going to sell it myself. And it was a disaster. Didn't sell. And they were getting, messed around with buyers. So it's not the right type of market to do a for sale by owner. It's the right type of, this is where you need all the tools that you possibly can have at your disposal. And you get good real estate brokers that are going to price your home right. And then you'll be able to sell it in a decent amount of time.
And I think we also have to be aware of different people pushing different products on us that don't make sense. We've seen some people out there in social media pushing certain things that don't necessarily make sense.
So I did want to talk about this because I had a customer just this week who comes to me, and this guy's a real estate investor, and he wanted to buy an investment property. He was thinking about buying a country house. And he comes to me and he says, I found this great country house. What do you think of this? It's a new construction. It's going to be delivered in the spring. First of all, who says it's going to be delivered in the spring? All construction projects are, not all of them are halted, but a lot of them are delayed.
Yeah.
Okay, so it's not. They were asking close to $700,000 for this country house, this new construction, when he could go out and buy an existing country house and start acting and making revenues off of it immediately for half that price.
And it wasn't hypothetical. You found other properties.
On the phone with him. We were sitting down and we said, you know what, we should actually make a trivia game out of this, like guess the price of your house. So I was giving him, I was like, okay, this house is this big. It has this many bedrooms. How much do you think that this house is worth? And he was coming back with like 700,000 and the price was 300. Okay, so there is opportunity if you're willing to look at it. Okay, very, very important, but you need the right people on your side. You need to make sure that your real estate broker is actually looking out for you and not looking out for their pocket. Okay.
Sure.
You know, a good real estate broker is going to play the long game, right? They're going to want to make sure that they take care of their customer property. The ones that, are in it for a quick buck, they're going to try and flip you properties like that. Guys, we're out of real estate. If people want to get a hold of us, Merav?
They can reach us at the office at 514-680-4674 or online at nordest.ca.
Guys, till next week, have a blessed week. Love you all.
Expressed in the preceding program were provided for general information purposes only and should not be construed as advice from CJAD 800 or Bell Media. Listeners should always consult their own real estate agent with questions or concerns. The preceding was sponsored content.
Northeast is the call to make. Whether you're buying your first home or you're a seasoned investor, Terry Kilakos and his team of mortgage and real estate brokers can help. It's simple and it's free. Make your dreams come true. Call Northeast.